Welcome back to the Pro Ticker Podcast, everyone. Your Saturday morning edition covering major financial magazine headlines.
Yeah, let's jump right into it. We've
Yeah.
got a big stack of news here
Yeah.
from Bloomberg,
Oh, yeah.
the Wall Street Journal, CNBC, and MarketWatch.
Wow. Busy week, huh?
Yeah,
Well, the holidays are approaching,
they are.
but the markets,
Yeah,
they never sleep.
never.
No rest for the wicked, especially in the financial world.
That's right.
All right, so first up, let's talk about BNP Paribas.
Okay.
Bloomberg is reporting that they're making a pretty big splash
Mm-hmm.
with a major acquisition
Yeah.
in the European asset management space.
So this is
Yeah.
a fascinating move because it really signals a shift in strategy for them.
Yeah.
You know, they're known for being pretty conservative,
Yeah.
often choosing to return cash to shareholders.
Right.
But this time, they're shelling out a hefty $5.1 billion
Wow.
to acquire AXA's asset management unit, which is the largest acquisition under CEO Jean-Laurent Bonnafé.
Yeah, $5.1 billion or $5.3 billion for those of us using dollars.
Right.
That's a lot of money to put on the table.
It is.
What's the strategy here?
Well, I mean, I think Bloomberg suggests
Okay.
that this puts them
Yeah.
directly up against Amundi SA,
Okay.
the current European leader.
So they're really looking to be a dominant player in Europe
I think so, yeah.
with this.
And this purchase bumps BNP Paribas's assets under management
Wow.
to a whopping 1.5 trillion.
That's enormous.
Yes, okay. And over 200 billion of
Okay.
AXA's portfolio
Yeah.
is in areas like private credit, infrastructure, and real estate.
Yeah, those are some pretty hot sectors right now.
They
A
are?
lot of investors are chasing yield,
Mm-hmm.
and those areas are known for their potentially higher returns.
Exactly. So BNP Paribas is not only expanding their overall size,
Mhm.
but strategically positioning themselves in these growing and potentially more lucrative markets.
So it's very interesting. It'll be
Yeah.
interesting to see how this plays out for them in the long run,
Definitely.
especially considering they offloaded their U.S. lender, Bank of the West, for $16.3 billion just last year.
Right. Yeah. Talk about a strategic shift.
Big change.
Big change.
Yeah, it makes you wonder if they see more opportunity in Europe right now,
Mm-hmm.
or if there's something specific about those sectors
Yeah.
driving their decisions.
It's hard to say for sure, but definitely something to keep an eye on.
Yeah. Okay, now let's hop over to the UK,
All right.
where CNBC is reporting on the latest Bank of England meeting.
Okay.
It sounds like there was some drama
Oh, yeah.
surrounding their interest rate decision.
Yeah, definitely more than expected.
Okay.
So while they ultimately held rates steady,
Mhm.
which most analysts predicted,
Yeah.
the split vote
Right.
within the Monetary Policy Committee was
Yeah.
a bit of a shock.
Okay.
CNBC notes that 3 members actually voted for a rate cut.
Wow. So only one dissenter was expected.
Right.
What does this tell us about the state of the UK economy?
Well, it highlights growing concern
Yeah.
about the UK's economic outlook.
Right.
Inflation is up to 2.6%,
Mm-hmm.
an 8-month high,
Wow.
but economic growth has been weaker than anticipated.
Okay.
CNBC even mentions that the economy contracted by 0.1% in October.
So it's a pretty delicate situation
It is.
for the Bank of England.
Yeah.
They're trying to balance rising inflation
Mm-hmm.
with potential slowdown.
Yeah, the classic
Yeah.
stagflation dilemma, right?
Yes, exactly. Do you fight inflation
Right.
or try to boost the economy?
Yeah,
And CNBC mentions that some analysts are even predicting a rate cut in February.
I saw that, yeah.
Wouldn't that further fuel inflation, though?
Well, that's the worry.
Yeah.
And why the Bank of England's decision is causing so much discussion.
Right.
A rate cut could provide some relief for
Right.
the economy, but
Right.
it also could send inflation spiraling even higher.
So it's a real tightrope walk,
It is,
and all eyes will be on their next move.
for sure.
Okay, speaking of economic anxieties,
Yeah.
the Wall Street Journal has an interesting piece
Okay.
on U.S. consumer confidence.
Right?
It seems things are looking up on the surface,
Mm-hmm.
but are they as rosy as they appear?
Well, the headline numbers from the
Oh.
Wall Street Journal
Yeah.
suggest a surprising surge in
Oh.
consumer confidence in December,
Interesting.
driven by improved buying conditions.
Okay, so consumers are feeling good.
Yeah, but
Okay.
this optimism seems to be heavily influenced by political leanings.
Oh, how so?
Well, Republicans are feeling much more confident about the future
But-
than Democrats.
Interesting. So how much of this is based on actual economic factors?
Right.
And how much is tied to partisan perceptions?
Yeah, that's the crucial question.
Yeah, that's a tough one.
And the Wall Street Journal further complicates the picture by reporting that inflation expectations have also ticked up for the first time since May.
So even with this apparent confidence boost,
Yeah.
concerns about rising prices remain.
They do.
It seems like U.S. consumers, much like the Bank of England, are stuck at a bit of a balancing act.
Yeah, I think that's a good way to put it.
Feeling better about things, but still keeping a wary eye on inflation.
Right.
This could mean that consumers will be cautious about their spending in the coming months,
Yeah.
potentially impacting economic growth.
Potentially, it'll be fascinating to see how both consumers and the Fed react to these competing forces in the new year.
Right. Well, since we've landed on the Fed, let's dig into their recent interest rate decision.
Right.
CNBC has the details on their latest move and the market reaction.
So as many anticipated, the Fed has cut interest rates again down to a target range of 4.25% to 4.5%.
Now, CNBC mentions this was widely expected by the market. But isn't this a bit contradictory?
Yeah, I mean...
You know, the Fed has been describing the economy as strong.
Right.
And inflation is still hovering between 2.5% and 3%.
Yeah.
Why cut rates at all in that environment?
It's a great question.
Yeah.
And one that has sparked debate amongst experts. Some argue, as CNBC points out, that this move was unnecessary, but might even exacerbate inflation.
Right.
Others suggest that the Fed is trying to be proactive, getting ahead of any potential economic slowdown.
So it's like they're trying to walk a tightrope between supporting growth and keeping inflation under control.
I think so, yeah.
Is this a sustainable strategy?
I mean, it's definitely a delicate balancing act.
Yeah.
CNBC notes that the Fed is aware of the risks involved in cutting rates too aggressively. So they're trying to signal to the markets that future cuts won't come as easily. It seems like they're going to have to do a lot of communicating to manage expectations and avoid spooking the markets.
Speaking of President-elect Trump and potential market skulking, Market Watch has a piece about the recent government shutdown scare.
Oh, right.
Sounds like things got pretty tense in Washington.
Yeah, it was a turbulent week.
Culminating
in the Senate approving a short-term funding bill just hours before the deadline.
Wow, down to the wire.
Down to the wire.
And Market Watch details how President-elect Trump's initial demand for a debt ceiling increase as part of the deal really threw everything into disarray.
It did.
He eventually backed down, but it was a clear display of his influence over fellow Republicans.
Absolutely.
Yeah, it seems like this was a preview of the kind of political maneuvering we might expect in the coming year.
Yeah.
Even though Trump isn't officially in office yet,
it
certainly raises questions about the potential challenges in governing and passing legislation moving forward.
It does, and that's not even taking into account his stance on trade or his impact on markets like crypto, both of which we have articles on from Market Watch and the Wall Street Journal, respectively.
Well, it sounds like we got a lot more to unpack.
We do.
Let's take a closer look at some of those other headlines after a quick break.
Sounds good.
Stay tuned.
And we're back, ready to dive a little deeper into these financial headlines.
All right, sounds good.
So before the break, we were discussing President-elect Trump's influence and potential for market disruptions, which brings us to a fascinating article from Market Watch. It delves into this idea of a U.S. strategic Bitcoin reserve.
Interesting.
Something once considered a fringe concept, but now gaining some serious traction.
Yeah, it's definitely a radical idea.
It is.
But the fact that it's being seriously discussed with support from figures like Representative Ro Khanna, Senator Cynthia Lummis, and even President-elect Trump himself,
as Market Watch points out,
speaks volumes about how the perception of cryptocurrency is evolving.
It does, and you have to consider the scale of this proposal. Senator Lummis has even introduced a bill suggesting the U.S. government purchase 1 million Bitcoin.
Wow.
Over 5 years.
That's a lot.
That's a massive undertaking.
Yeah.
And it demonstrates how some policymakers are starting to view Bitcoin as a potential strategic asset, on par with gold or oil.
That's a huge shift.
It is.
But MarketWatch also highlights concerns from some Bitcoin purists.
Right.
They see government involvement as a betrayal of the decentralized, anti-establishment principles
Yeah.
that Bitcoin was founded on.
That's a valid point.
Yeah.
Bitcoin was designed to operate outside the control of governments and central banks.
Right.
The fear is that government stockpiling could distort the market and undermine Bitcoin's intended independence.
Right.
It's a complex debate with valid arguments on both sides.
Yeah, it seems like this debate really boils down to a fundamental question.
Mm-hmm.
Is Bitcoin's future as a tool for governments or as a truly independent, decentralized currency?
Right. I'm curious to hear your thoughts on this.
Well, it's hard to say, especially considering those arguments that MarketWatch presents from both sides, including, those like Catherine Austin Fitts, who suggests that this push for a Bitcoin reserve is just a scheme for Bitcoin billionaires to unload their holdings on the government.
Yeah, it's hard to say for sure what the motivations of everyone involved are. There's always a risk of manipulation in any market, especially one as volatile and unregulated as cryptocurrency.
For sure.
However, MarketWatch also cites proponents who genuinely believe that a Bitcoin reserve could benefit the U.S. economy and its global financial standing in a world that is increasingly digital.
Interesting.
Ultimately, the true impact of such a reserve, if it were to happen, would depend on its implementation and management.
So, lots to unpack there.
There is.
And something we'll definitely want to continue following as the situation develops.
Absolutely.
Now, let's shift gears and circle back to another headline we touched on earlier.
Right.
President-elect Trump's trade threats against Europe.
Oh, right.
The Wall Street Journal really breaks down how he's using tariffs as leverage to try and force the EU to buy more American oil and gas.
It's a tactic we've seen from him before.
Yeah.
Make a bold demand and then threaten tariffs to extract concessions.
It seems very familiar.
The Wall Street Journal reminds us he used similar strategies during his first term with China, Mexico, and Canada.
Right. And it seems like his fixation this time is on the U.S. trade deficit with the EU, which stood at $162 billion in 2023.
Wow.
But, as the Wall Street Journal explains, that number only accounts for trade in physical goods. The picture is more balanced when you factor in services, where the U.S. actually has a surplus with the EU.
That context is important. It seems Trump's focus is specifically on manufacturing and energy, areas where he feels the U.S. has been disadvantaged by European trade practices. But it's worth noting that the EU significantly increased its imports of U.S. LNG after the Ukraine war disrupted their supply from Russia. The question is, how much more can they realistically buy, given existing infrastructure and contractual obligations?
That's a good question.
The
Wall Street Journal reports that European officials are scrambling for solutions.
They're considering everything from buying more U.S. agricultural and defense products to potentially retaliating with counter tariffs.
So this situation has all the hallmarks of a trade war brewing.
It does.
What do you think the potential fallout could be?
A trade war is rarely beneficial for anyone involved. It could disrupt supply chains, increase prices for consumers, and harm economic growth on both sides of the Atlantic.
Seems like nobody wins in that situation.
And as the Wall Street Journal hints, this is likely just the first test of Trump's America First approach in his second term.
Interesting.
So we might see similar situations arise with other trading partners.
So it's definitely a story to watch closely.
For sure.
Now, let's move from global trade tensions to a company trying to navigate the often turbulent world of meme stocks. MarketWatch has a piece on Trump Media and Technology Group, the parent company of Truth Social, and its volatile journey in the stock market.
This is a fascinating case study.
That is.
They've benefited from meme stock mania with their stock price doubling this year.
Wow.
Even though the company is still relatively small and unprofitable. But it seems President-elect Trump himself might be adding to the volatility.
Oh, how so?
Well, MarketWatch details how Trump recently transferred his entire $4 billion stake in the company, a whopping 53%, into a revocable trust managed by his son, Donald Trump Jr.
That raises some eyebrows.
It does.
Yeah.
And not just because it adds to the stock's unpredictability.
Right.
MarketWatch quotes several ethics experts who have raised concerns about potential conflicts of interest.
That makes sense.
This is especially significant considering Trump's history of blurring the lines between his business dealings and his political activities.
Yeah, it's hard to disentangle those things sometimes.
It is.
You know, is this surge in Trump media's stock price driven by genuine belief in the company?
Right.
Or is it pure speculation tied to Trump's political fortunes?
It's hard to say for sure.
Yeah.
It's likely a mix of both.
Right.
And as MarketWatch points out, the company's performance in the coming year could be a key indicator of investor sentiment towards Trump and the overall health of the meme stock phenomenon.
So another development to keep our eyes on. Now, before we move to our final headline,
all right,
let's take a quick detour back to the U.S. economy and unpack the latest inflation data.
Sounds good.
CNBC has a piece on the November PCE inflation figures.
Okay.
And it seems there might be a glimmer of hope.
Oh, is that right?
CNBC reports that the core PCE price index, the Fed's preferred inflation measure, rose just 0.1% in November.
Okay.
Slightly below the 0.2% analysts were expecting.
So that's a positive sign, right?
It is, yeah.
Does this mean inflation is finally starting to cool down?
Yeah, it's possible.
Okay.
Remember, the Fed has been aggressively raising interest rates to combat inflation. And we might be starting to see those actions take effect.
That would be welcome news for a lot of people.
It would.
But CNBC also quotes Chris Larkin, managing director of trading and investing at E-Trade Morgan Stanley, who cautions that it's too early to declare victory over inflation. He points out that 1 month of data doesn't necessarily indicate a trend.
So, cautious optimism for now.
I think so.
Okay, now for our final headline today.
Right.
Let's look at another country grappling with high inflation, Russia.
Okay.
CNBC reports that the central bank has surprised markets.
How so?
By holding its key interest rate steady.
Okay.
At a staggering 21%.
21%? That's incredibly high.
It is.
What's driving this decision?
Well, CNBC explains that Russia is facing an inflation rate of 9.5%.
Okay.
Fueled by a combination of factors, including the war in Ukraine, Western sanctions, and domestic supply chain disruptions.
So they're in a tough spot.
They are, yeah.
It's a difficult situation for any central bank.
Yeah.
They're using high interest rates to try and cool down the economy and rein in inflation.
Right.
But it's a risky balancing act.
Exactly. Raising rates, too much risks, choking off economic growth.
Right.
And potentially triggering a recession.
Yeah.
But keeping rates too low risks, letting inflation spiral out of control. It seems they opted for a wait-and-see approach this time.
Okay.
But CNBC notes that many analysts were expecting a further rate hike.
So this hold has come as a surprise?
It has. It'll be interesting to see how this plays out.
Yeah.
And whether this decision will be enough to bring inflation under control in Russia.
Definitely.
Well, this final headline really highlights a challenge faced by central banks around the world.
Yeah.
Balancing inflation control with the need to support economic growth.
It's a theme we've seen echoed in several of the headlines we discussed today.
Yeah, absolutely.
It's a reminder that the global economy is interconnected.
Yeah.
And what happens in one part of the world can have ripple effects elsewhere.
Absolutely. Well, as we wrap up this section of our deep dive, what stands out to you as the most significant theme or trend we've explored so far?
Well, for me, the overarching theme is uncertainty.
Yeah.
You know, we're seeing it in the political landscape. With the incoming Trump administration, in the economic outlook, with persistent inflation.
Yeah.
And this looming possibility of a recession.
Right.
And even in the geopolitical arena with the ongoing war in Ukraine.
Yeah.
And, you know, rising tensions between major global powers.
Yeah, it does feel like we're living in a time of unprecedented uncertainty.
It does.
And that has a profound impact on how people make financial decisions, invest their money, and plan for the future.
Right. It's a constant balancing act.
It really is.
You know, and as we've discussed, those uncertainties are further amplified by factors like President-elect Trump's unpredictable policy moves, the growing influence of meme stock culture and social media on market dynamics, and, you know, even the evolving role of cryptocurrencies in the global financial system.
It can feel overwhelming at times.
It can.
Trying to make sense of it all.
Yeah. Are there any bright spots or potential opportunities?
Yeah, good question.
That you see emerging from this complex landscape?
Well, I think despite all the challenges, there's also incredible innovation and resilience.
Oh, absolutely.
The cryptocurrency and blockchain space,
Mm-hmm.
despite, recent volatility and regulatory scrutiny,
Right.
it continues to grow and evolve at a rapid pace.
It does.
Even the debate about a U.S. Bitcoin reserve, as controversial as it is,
right,
it highlights how far crypto has come in terms of mainstream acceptance and consideration.
Absolutely. And it's not just Bitcoin.
Right.
There's, a whole ecosystem of fascinating projects and technologies being developed, from decentralized finance platforms to new ways of managing and securing digital assets.
Right.
This space has the potential to fundamentally change how we think about money and finance.
Very exciting.
It's definitely an area worth paying attention to.
So for investors who are willing to do their research, understand the risks, there could be some interesting opportunities.
For sure.
In the crypto space.
Absolutely.
It's a reminder that even in times of uncertainty, there are always potential areas for growth and innovation.
I think that's a great point.
Yeah.
And I think it's a valuable takeaway from our discussion today.
Okay.
While it's important to acknowledge and understand the risks and challenges we've discussed, it's also essential to remain open to new ideas and opportunities. The financial landscape is constantly shifting.
Right.
And those who can adapt and evolve will be best positioned to navigate these complex times.
That's some sage advice.
Thank you.
As we wrap up this week's deep dive into the financial headlines, is there any final thought you'd like to leave our listeners with?
Stay curious, keep learning, and don't be afraid to challenge your assumptions.
Okay.
The world of finance is constantly changing.
Right.
And the only way to stay ahead is to embrace lifelong learning and be open to new possibilities.
Well said. And on that note, we'll wrap things up here.
That's good.
We'll see you all tomorrow morning with more headlines from major financial magazines.
All right, see you then.
Until then, happy investing, everyone.